Two legendary market experts are stepping forward to warn we're in the earliest stages of what they call the Great Unraveling, a specific event starting to take root in America that's behind the recent crash in stocks and the record inflation you're seeing. But they worry it's about to get even worse. And many of the things you take for granted are due for a big disruption in the months ahead. Your Social Security benefits will likely be slashed. Your taxes are probably going way up. And many of your investments are likely to continue falling. Meanwhile, even if you think you've saved enough money to retire, you're probably going to need way more money than you thought. Your personal success all comes down to how well you understand what's heading your way. This is why I strongly encourage you to read about their warning today, totally free. It's all spelled out in a free report we've put together about the Great Unraveling. Get the facts yourself. Go to unravelingreport.com to get your free copy of this report. You can learn how to get their full playbook to prepare for what's coming. Again, that's unravelingreport.com for a free copy of this new report. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show, and please welcome back to the show Mark Moss, author of his latest book, The Uncommunist Manifesto. Mark, good to see you. I know all the folks think we're going to start with Bitcoin. We're not. We will touch on it, but I have a lot of goodies in store for you. But first and foremost, how you doing?
Yeah, Danielle, thanks so much for having me back on. Always a pleasure to be here. And yeah, I love throwing the audience a curveball, so that's good. But yeah, I'm doing great. It's been a wild ride this year. As somebody who kind of commentates on and digests the news, it's definitely kept us busy. So it's been a wild ride, but I still have high hopes, and I still feel pretty optimistic about the future. So
Good. Let's start by talking about the Fed, because you recently tweeted that the game has changed. Absolutely. You
yeah.
said the Fed is starting to suck liquidity out of the markets and they're beginning to raise rates. We're entering a new monetary environment where the Fed is vowing to keep rates higher for longer. Now, I found this interesting because most of the folks have been coming on have been saying the contrary, like, no, we're going to head back into QE. But what's Mark Moss's take here?
Yeah, I think, we have like long-term secular trends, and then within those long-term secular trends, there's cyclical trends that move within inside those. And I think that the long-term secular trend has changed. And so we've seen bond yields have bottomed out and stock markets have topped out. And they're both reversing off of that, or I should say the interest rates. So the interest rates, bottomed at zero and they're bouncing back up. Long-term secular trend is broken. We're now rising, and then, like I said, stock valuations are coming back down. But I think more than that, it's really the shift at the Fed itself. And so, of course, Jay Powell said that they weren't thinking about raising rates, and then they wouldn't raise rates for 4 years, but that was like 2 years ago. Now he's saying that they're going to keep rates high for a lot longer. But I think ultimately what gives me the reason why I would say that is trying to kind of understand their worldview. Being a Bitcoin person, I've heard 1,000 times or maybe 1,000,000 times that the central banks or the governments will never allow something like Bitcoin to happen because they don't want to give up control over the money, which of course is a great argument, and there's a lot to that, and we can unpack that. But I would somewhat agree with that. They don't want to give up control over the money. But if that's true, then does the Fed, Jay Powell, want to give up control over the dollar to the ECB, to the BOJ, to the Ruble? And so we have all these different factions that I see that are kind of fighting. And it looks like the Fed really wants the dollar to remain strong, and they're doing everything they can do to strengthen that, including continuing to raise rates. Taking on the euro dollar market, it seems like trying to drain liquidity out of that, get a handle on that, so to speak. And Jay Powell's been very clear. He doesn't care about your retirement account. As a matter of fact, he wants it to come down. He doesn't care about the value of your home. He wants it to come down. And even worse than that, you making a good wage is a problem for them, and they want wages to come down as well. And so they don't care about the markets. A lot of people think they're going to pivot when there's enough pain. I don't see that being the case. He's reiterated over and over that they won't. I believe rates will stay longer than most people expect. He said that he's okay to take it too far and break things because they have the tools to rebuild things. And ultimately, I believe it comes down from this worldview of trying to protect the dollar above all other currencies and get control over that.
Okay. Just to reiterate what you said, you feel their main goal, forget inflation, interest rates, whatever, it's to keep the dollar high no matter what. Whatever the cost.
Whatever the cost, yeah.
It's interesting because I had Rick Rule on recently who said that the US dollar, of course, it's this ultimate strong franchise, but ultimately they will wreck the US dollar.
Well, ultimately, sure. So, I mean, over what time frame? This is always the question we have to kind of go into is like over what time frame. So, eventually, sure, the dollar's going to continue to trend down to zero. So, it's not like they've saved it; it never goes down. And so, I'm talking about over the next 12 to 36 months. Ultimately, sure, of course, they're going to have to wreck the dollar. We are in a debt-based monetary system, which is basically a fiat Ponzi scheme, right? And so if they don't continue to always inflate the currency, the whole system crashes. And so they're going to have to do that. We're already seeing this. So we saw massive numbers this week. The Fed is paying out more interest because they've raised rates than they're receiving in, and so they're technically insolvent. The problem is that now they're not giving money to the Treasury, so the government now is starving for money. At the same time, they're trying to pass this enormous omnibus bill, and they need more money. More deficit spending, but they're not receiving the money. And so we have these constraints, and I believe this is why the market is somewhat calling the Fed's bluff. And so, Jay Powell goes, hey, you didn't listen to me correctly. There's going to be pain. I don't know why you guys think this is bullish. This is going to be bad. But the markets are somewhat calling their bluff because of maybe what Rick Rule is seeing is we understand the natural constraints that the Fed and the governments are in. They are going to have to print money. I just think that they're going to continue to push the pain longer than most people. And then eventually, of course, sure, they're going to pivot. They're going to blow this thing sky high. Things are going to crash bigger, faster, deeper than they thought they would, a la March 2020. And I expect a sort of a V recovery. They'll blow this thing sky high. We saw 700 billion pledged in 2008. That ended up to about 1.5 trillion. We saw somewhere between 7 to 11 trillion in 2020. The next one's going to be 20 or 30 trillion. And the dollar will, of course, continue to decline in value. So he's correct. It's just over what time frame.
Interesting. I also want to talk about your thoughts on the housing market. You raise a very good question, Mark. You say, are we speeding towards another 2008 style housing market crash? In 2022, we are watching the steepest 3-month annualized decline in the housing market since '07. What comes next? Thoughts on where housing goes from here, Mark?
Yeah, so I started my career buying bank-owned repos. At 18 years old, I was buying bank-owned repos in Southern California, fixing them up and flipping them. Did hundreds of those.
Good for you.
Built from the ground up. I built this building that I'm broadcasting from right now, and so I've been involved in real estate for a long time. And I unfortunately didn't get through 2008 without taking a massive beating. Southern California, nationally over that 4-year period from about 2007 to 2011, 12, when it finally bottomed, it dropped about 30% nationally. But in Southern California, it dropped 60% in 12 months. It was insane. And so one thing that I've learned is that there's no such thing as the real estate market. There's thousands of markets broken down by size, type, price, et cetera. And so what we're seeing is, to the point that you've made, yes, in some locations like Seattle, San Francisco, we're already crashing worse than we did in 2008. So we're already worse. However, in some markets like Miami, it hasn't crashed at all. It's flat. Many markets in Florida are flat. Some of them are even still going up. And so how is it that some are worse than 2008 already, and then some are still flat, or some are still going up? And that's because, again, there's no such thing as the market. There's thousands of markets. And what we've really been seeing is two big mega trends in real estate. The first is the demographic shift, or really the baby boomers. They're retiring. They don't want to live in the cold. They don't want to live in the snow. They don't want to plow their driveway anymore. They don't need the big McMansion anymore. Their kids are gone. They want to move somewhere where it's warm and they can play golf and tennis, or pickleball now. It's the big sport. And they can play that all the time, right? And so they want to move to low tax states, and they're moving. So there's then that big shift. But then the pandemic brought another big shift, which was the work from home shift. But more importantly, it was I want to move to pro-business states that don't shut my business down, don't lock me inside. And so we've seen massive influx into states like Florida. And so that's why we're seeing that. They're leaving California, they're leaving the Bay Area, they're leaving Silicon Valley, et cetera, and they're moving to these areas. And so I think that will continue. The way that I look at the real estate market kind of moving forward is, if you were to put a little bit of water on a counter, it would kind of it would pool, and you'd have like little pockets of water. And I think that's what the real estate market will do. Some areas will continue to do really well. Some of them are going to do really, really poorly. Specifically, the areas that are going to do very poorly and are doing very poorly is we have to divide the market into new home construction and existing homes. Because new homes, we have, giant publicly traded corporations. They built all these homes, and they just need to get these things out. And they're marking them down, marking them down, marking them down. Even if they sell them at a loss, let's just get them off the books. But existing homes are different because people locked in probably some of the lowest rates we might ever see, 2%, 3%, 30-year fixed mortgages. And those people with those existing homes do not want to sell their house with a 3% mortgage to go buy a house with a 7% mortgage. And so they're not selling. So the inventory is very, very low in existing home sales. Now, some people might say, well, Mark, you don't understand. There's going to be massive job layoffs and whatever. Maybe. We'll see what happens. But I think you have to understand there's differences in markets. Look for supply and demand. Where are the areas that have massive demand? Where are people leaving? And then look at the difference between the new homes and the existing homes.
Right. I was going to say, well, let's add that layer of recession risk, right? And let's give folks a game plan as we enter and start 2023 here of, what would you do? What are sectors you're looking at?
Yeah, so for 2023 and kind of maybe for the next year or two, the sectors I'm looking at, I think obviously commodities, real things, energy, right? Those are the big buckets. Vladimir Putin, he is fighting the fiat money monster, if you will. He said it publicly many times. He said that the age of artificial wealth is over, and now it's about real wealth or commodities. And so, energy, metals, minerals, et cetera, I think is going to do really well. Gold appears to have bottomed out. It's done really well over the last 30, 45 days. And we're seeing real things that I think we're going to do really well. I think equities are going to continue to trend down. I think the PE ratios, this is what a lot of people don't understand with stocks, or they miss, I should say, is that let's just say Amazon, it's on sale, right? It's a world dominator stock. I believe that Amazon will be a bigger company in 5 years or 10 years from now. I believe it will. It'll probably have more market share than it does now. It'll probably be doing more revenue. But the stock could actually be lower because of the PE ratio. We can take a company like Cisco, for example, which is still a dominator company in its industry, and it's never exceeded its high that it reached in the 2000 dot-com bubble. And so I believe that as the Fed keeps interest rates up, the PE ratios will continue to trend down. And so I think equities, specifically around the tech stock equities, are going to continue to do horrible for the next couple of years.
Interesting. Mark, just let's dig a little deeper because a lot of folks know you as can I say Bitcoin maximalist?
Sure.
Okay. But they'd be surprised to hear that you don't think we'll see another crypto bull run. Is that a correct statement?
Yeah, that is a correct statement. I've made quite a few statements about that. I've received quite a bit of backlash from the crypto community about that. But yeah, I would say categorically, I don't think we'll see another crypto bull run.
Let's talk about Bitcoin specifically.
Yep.
Will we not see all-time highs again for Bitcoin?
So, what somebody like myself, maybe as you said, a Bitcoin maximalist, but a Bitcoin person, we're very clear to say Bitcoin, not crypto. Not saying that Bitcoin isn't a cryptographically secured currency. It's not a cryptocurrency. It's just that when we talk about Bitcoin, we're talking about Bitcoin, and when we talk about crypto, we talk about crypto, but we don't interchange those two.
Okay.
One of my favorite analysts, Lynn Alden, said, to confuse Bitcoin and crypto means you understand neither. And so it's kind of like that. And so when I say that crypto as a category, I'm making the claim that it won't see another bull run as a category, but I believe it's massively bullish for Bitcoin.
Okay.
So I believe Bitcoin will go on to another bull run, and even a bigger bull run than it might have gone on before once we get rid of the crypto piece.
Okay. So you want to see, we need the washout is what you're saying, but I'm going to ask you, make the case for Bitcoin now, because unfortunately, or maybe it's not unfortunately, that people do throw in Bitcoin where we're talking about crypto, and especially with the fallout of FTX, and folks who are not as in the know as you will say, well, why should I still believe in Bitcoin given the shakeout we've seen in the space?
Sure. So about every 50 years, for the last 300 years, about every 50, there's a technological revolution. So we have lots of new technologies, but about every 50 years, there's a technological revolution. There's been 5. So we had the Industrial Revolution. We had steam engines and railways. We had electricity and steel. We had oil and automobiles. We had microprocessors, which brought us telecommunications, internet, et cetera. And now we're witnessing another technological revolution, and that is Bitcoin. And the revolution is decentralization. Now, what's interesting about technological revolutions is they change the course of humanity. Obviously, electricity did, automobiles did, telephones and internet did. They changed the course of humanity, but they also drive financial markets. What's driven the markets for the last 50 years? Telecom, internet. What drove before that? Ford, GMG. What before that? Oil, steel, right? And so that's what we're witnessing. Now, Jack Mallers said that crypto is an arbitrage on the trend. An arbitrage on the trend. So we have a real technological revolution happening, and that is decentralization. All of the cryptocurrency assets, because they can't be more decentralized than Bitcoin, they try to innovate on something else. The problem is the innovation isn't something else. The innovation is the decentralization. And so you could look at all these other crypto assets sort of like a DDoS attack or like a denial of service attack against Bitcoin, where in a denial of service attack, you'd have spam that would flood a server that would kind of prevent it from doing what it needs to do. And Bitcoin is sort of the same way. Stansberry has a bunch of newsletters that come out. I get them on my email. I get flooded with emails and Medium articles all the time about the next Bitcoin. The Bitcoin went up by 10,000. This one will go up by more. And so all of these investors, they think, oh, we're just trying to make more US dollars. And so this one could go up more or faster than Bitcoin. So I'll buy that instead. And of course, all assets move, all prices move on supply and demand. So Bitcoin has a supply cap of 21 million. If more people buy it, more demand, that pushes the price up. But the 1,000, 5,000, 10,000, now 22,000 crypto assets pull the demand away from Bitcoin because most people are not educated enough to understand what's going on. And they go, oh, this is the next Bitcoin. I can make money on it. I can make more US dollars. Whereas Bitcoiners, and I know you have many of them on as well, you know, the Max Geisers of the world, like we're on a different mission. Like this is a decentralized revolution that will literally change the world. We've solved the oldest problem in humanity, which is how do I custody my assets in a way that can't be manipulated, stolen, and if I want to transfer it, it's censorship resistant. And so we've solved that problem, and it's a big deal. It's a big deal that's going to create a lot of value, more value than we could ever imagine, and most people just don't understand that piece.
So, okay, so you made the case for Bitcoin, but why do you feel crypto has seen its last bull run? There are other
The reason why I would say crypto as a category had its last bull run is because of what's happened with FTX and the potential regulations that are coming in. So you first have to understand how crypto as a category works. And so Sam Bankman-Fried gave an interview earlier this year, I believe in May, with Joe Weisenthal and I forget. And he explained, he said, let's say that you create this box, and then this box is like this world-changing protocol. And then you create this box token. And then you trade this thinly traded box token to make it have a perceived value. And then you let other people start trading it. And so he kind of highlighted the way cryptocurrency works. And so the crypto market as a category blew up because venture capitalists love it, because traditionally they would have to invest into a venture capital fund, wait 10 years for a liquidity event. But today, or in the last couple of years, they've been able to invest into these crypto assets where a creator would create this box token, as SBF called it. And this venture capital would be able to come in and buy these box tokens for 3 cents and automatically turn and flip them for 9, 12, or 26 cents into the market, which of course they love. They've never seen that before, which of course started bringing more and more and more venture capital, hundreds of millions, billions of dollars into the space. Then they started pushing all the media, the advertising, the Super Bowl ads. And so it created this massive buzz. And everybody loved it. As SBF said in that interview, first they trade it with Alameda to give it perceived value. Then they advertise it, and then the market, retail, jumps in and think there's something there, even though there's not. Mm-hmm. And I know that may sound cynical, and his interview was cynical, but that's the way the majority of crypto, not the majority, all of it worked. I believe all but, I think, 4 or 5 cryptocurrencies, all the other ones had a pre-mine and a token sell. All of them worked that way. And so the reason why I would say as a category we won't have another bull run is because I believe that now the SEC, the CFTC, Congress is going to be forced to act.
Yeah.
The SEC is there to protect consumers. They have obviously failed, right? They've done a horrible job. They should probably just shut down and disband. But they have egg on their face, and they're going to be forced to act. We have, Elizabeth Warren and Maxine Waters are all calling for regulations. They're coming. And a lot of people push back on this, and they didn't like when I said that because they say, Mark, you don't understand.
Right.
If the SEC regulates this, these tokens will just go offshore. They can't stop innovation. And I agree, right? They can't stop innovation. But if these tokens go to these offshore
Right.
jurisdictions with no SEC oversight, the U.S. venture capital companies are not going with them. That money is not going. If it goes into a regulated space where these tokens have to go through regular securities registrations, it just changes the landscape. So I'm not saying it goes away, but I think the days of 2017 and 2020, 2021, where the entire market cap went up and you could close your eyes and throw a dart, I think those days are over.
What about all the blame that was happening? You saw O'Leary's testimony in front of Congress saying that, it was Binance perhaps orchestrated the takedown of FTX. I mean, is this just noise? Is it even relevant?
Well, I would say that FTX orchestrated the takedown of Terra Luna, which then took down Celsius, which then took down 3 Arrows Capital, which then ultimately weakened FTX. Did Binance, potentially cause something because they said they wanted to sell their tokens? Maybe, maybe not. But I would say
Valid.
that we don't have any fact of that. But I would say that FTX started this problem potentially, and they caused their own problem because of their sham of a balance sheet. And so if FTX said they want to sell the token and they had the money to back it up, it wouldn't have been a problem.
Let's talk media a second because you saw the headlines that FTX presumably was funding Block, which is a competitor to CoinDesk, obviously a news organization speaking favorably about FTX. What does this tell us about who we should trust? Where should we get our information from? If even news organizations are bought.
Yeah, and not just Block, but even bigger than that, we saw that I believe advertising lost 6% of its revenue from cryptocurrency dropping out. So all the ads that we see, all of that, and yes, to the point that you're talking about with Block, it's very hard to know who to trust, and not just in the cryptocurrency space, but overall. And so that's a tough question, Danielle. I would say, practice critical thinking, which is something that we've seemed to lose. Anytime I get a piece of information, if I get it from, let's say, RT, I know it's coming from Russia, so I understand who it's coming from and what slant it might have. And then I have to dissect the fact from opinion. And if I get it from Washington Post, it's a CIA mouthpiece, and so I look at it differently, right? And so I would say that we have to take each piece of information and look at it critically. Who's telling me? What interest do they have? What's the fact? What's the opinion? And it's very difficult. But of
Same
course,
goes for what the Fed is telling you.
well, I believe the Fed tells us the truth. I believe that the Fed projects way in advance what they're going to do because they're not trying to shock the market. And so they announced in November of last year they were going to start raising rates, but they didn't start raising rates until January.
Right.
And so I think we take the Fed at their word. It's a little bit different, but in the crypto space and just the news space overall, yeah, it's a big problem. But back to Bitcoin, the whole point with Bitcoin is trust. Don't trust, verify. And because it's an open source network, nobody controls it. We don't have to worry about things like that.
You mentioned commodities before. So are you one of the few folks that still believe to own gold and Bitcoin?
Yes, certainly. I'm not I'm not somebody who would ever tell somebody else, and I would never do it myself, put all my money in one basket. I did that before. I did it in 2008 in Southern California real estate. It worked out really poor for me. And so I would never do that. After 2008, after I got my real estate portfolio wiped out, I had to start digging into the financial system, and I learned, fiat money, bad. Sound money, good. And I became a gold bug. And I've been a gold bug since 2008. Credit to Mike Maloney and Peter Schiff for some of that education there. And I still like gold. I think gold is very compelling from many standpoints, especially as an investor. I just think that it doesn't work in the information age, and Bitcoin is better because of that, and for many other reasons.
Any other wisdoms as we start 2023 here for investors? Mark, obviously 2022, some would say was quite an anomaly of a year, whirlwind of a year, painful in many sectors. How should we prepare for the new year?
Yeah, so for preparing for the new year, one saying I love over and over that I use all the time is Charlie Munger, Warren Buffett's partner. He said that the big money is not made in the buying and the selling. The big money is made in the waiting. And so what that means to me is two different things. Made in the waiting. So we want to wait until we have that fat pitch. We want to wait until we have that good opportunity to really strike hard and go hard. And we should be okay just to wait for that. The second part about that saying for me is that to make big money, you need to get into big trends early, and then you have to wait a long time for them to develop. Now, for me, I started my career in real estate. Like I said, this building that I built here, that was a 5-year project. So I sort of have like this, like I'm okay waiting 5 years to develop a project and make money on it. And so I think if you can look at some of these big trends, like I've already kind of spelled out, which I think are the energy and the commodity plays, Bitcoin plays, and even gold, and you are okay having like a 5-year wait and hold outlook, I think you can make more money than people realize. We have a problem with the short-term mentality. And so the reason why I would say that, to answer your question, is that I think we're in this wait and see period right now. This is not the time to be overly active. You don't need to put all your money into play. I'm sitting on about a 50% cash position in my investable portfolio right now.
Yep.
And so I'm waiting. I'm waiting for things to give me a little bit more clarity and direction. I'm waiting. Once I get the clarity and direction, I'll go hard, and then I'll wait many years for that to develop.
Interesting. And it's interesting how it may seem boring, right? This wait and see period. But you say there lies the treasure trove.
Investing should be boring. Investing should be boring because we're waiting, right? We're waiting for these to develop. So if you bought Uber, you were lucky enough to get pitched Uber in Silicon Valley. Lots of people passed it up, but some people took advantage of it. But they had to wait 10 years to have a liquidity event. Now, they made massive returns. Lots of wealth was made in these early stage companies like PayPal or Uber, but they had to wait. They had to wait a decade, right? And so it's supposed to be a little bit boring. You need to be able to wait. And,
So
and
how
that's a
long
problem for today.
how long do Bitcoin investors have to wait?
Well, it depends on what you're waiting for, right? So I think a couple things. One, let's talk about that. So we know that Bitcoin is going to be lots of other things than we know today because it's just a revolution. But what we do know today is it's the best pristine collateral. It's the best asset because of the fact, like I said, it solved the problem where I can own it, nobody can manipulate it, and nobody could seize it, steal it, et cetera. And so if we look at just using Uber as an example, if I pitched you on Uber, I'd say, hey, it's going to be worth $100 million sometime. And you'd be like, Mark, you're out of your mind. You're crazy. Like, can't I just call a taxi company or a limo company? What do I need that for? And I'd say, well, if I could disrupt the taxi industry and take 5% of taxi and 5% of limos and 5% of vans, that's how I get this valuation. So if we take a look at store of value assets like gold, gold's whatever, 11, 12 trillion today. Okay. So we know that JP Morgan and Citibank both put out guidance that said they believe Bitcoin will overtake gold. And of course, we can have many conversations as to why I think that will happen. But if that were to be the case, that's a 20x from here. We know that it's also called a Swiss bank account. So it's a way I can hold money outside the banking system and nobody could seize it. And so people use offshore banks for that purpose. We've seen through the Russia situation, all these Russian oligarchs getting their bank account seized. And so it's certainly a better offshore bank account. There's $40 trillion parked in offshore banks. We know that in fiat currencies, there's about $100 trillion. Now, people holding US dollars don't really see a problem, but if you're holding bolivars or Turkish liras, like you have a serious problem with currency on your hand. So there's certainly a $100 trillion chunk there that could be taken a piece of. Then we have bonds. We have about $100 trillion in bonds. And again, people buy that to store their value. About 18 trillion is negative yielding. That's coming down, but that's a big problem. Equities, we were talking about stocks earlier. There's about 120 trillion sitting in equities. And then back to real estate. Of course, people live in their homes, but most people like to invest. The rich like to invest into real estate. And there's about 326 trillion in real estate. So if we just add up those big categories, and we'll just stick there, we're at about $700 trillion of store of value assets. So if Bitcoin could just capture 5% of that, which I think is totally reasonable, that's $35 trillion market cap divided by 21 million Bitcoin brings us to almost $2 million per Bitcoin. And I think we could be there by the end of the decade.
All right. Well, on that note, I think we'll wrap it there. Lots of good nuggets for the viewers, Mark. Any final thoughts?
I think, just like I said, kind of just marinate on that quote from Charlie Munger, the big money's made in the waiting. And so just think about that as we go into the next year. Make some moves, pay attention, but be patient because I think we're probably going to have more pain going through most of next year. Probably by the end of next year, we'll be coming out of it, but just be patient and wait.
All right. Be patient and wait. Mark Moss, thank you so much for being with us today.
Thanks,
Happy
Danielle.
New Year.
Yeah, Happy New Year to you.
And thank you all for watching. We'll have more great content coming your way, so be sure to stay tuned to the Daniela Cambone Show. And don't forget to sign up so you can stay on top of it all at danielacambone.com. That's it for me. Thank you for watching, and happy 2023.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.